chinese-strategy.com.
This is Christopher Lewis looking at the upcoming Wednesday, July 16th trading session. In front of you is the economic calendar. You can see pretty early in the day we have three fairly significant announcements coming out of Beijing. We have the GDP year to total, the GDP year over year for the second quarter, and the GDP quarter over quarter for the second quarter. The prediction is 7.4. That's what we got last time for the year to date. Same thing with the GDP quarter over quarter, and or year over year, excuse me. And the quarter over quarter one is predicted at 1.8. Was previously at 1.4. The economic numbers give us a general reading, if you will, on how global economies are doing as China produces so many different things. So that can have a significant effect on risk assets, the Australian dollar, gold, etc. Stock markets in general will probably react to that if it's a huge miss. If it comes in line, then expect it to have almost no effect. The UK has several different mid-level announcements, all of which involve employment. Probably not a major market-moving event, but any shocks could come in to perhaps influence the FTSE or possibly even the pound. As we go later into the day, there's really not a whole lot until we get into North America, and at that point in time, we have a couple fairly interesting economic announcements. Long-term tick flows are always interesting with the value of the US dollar in general. Just simply that shows how many people are buying bonds in the United States, whether we're going in or going out as far as money flow. Industrial production is predicted to be 0.3, was previously 0.6. That being the case, in and of itself probably will basically affect the U.S. stock markets more than anything else. And by far the biggest potential market-moving event will be the rate decision coming out of Canada, which is expected to hold steady at 1%. Now, having said that, we've had some pretty disturbing employment numbers out of Canada recently, so we could get a little bit of a shock there. Crude oil inventory numbers do come out later in the day, and we're expecting a drawdown of 3.4 million barrels, and previously had 2.37. That, of course, has a major effect on oil markets, so obviously there's a direct correlation there. And then the Beige Book gets released by the Fed. Probably not a market-moving event, although there are some things to pay attention to, and it tells you the basic overall tone of the economy in the United States. But quite frankly, the Fed's been pretty transparent when it comes to what it thinks about the economy, so I do not expect this particular announcement to move the markets that much. Looking at the euro dollar, you can see that we actually did get a little bit of motion here during the day on Tuesday, but we're still well within this trading range. Really, in my opinion, I feel that we are stuck between 135 and 137, and therefore I'm actually looking for some type of supportive candle towards the bottom for a short-term buying opportunity. Beyond that, there's really not a whole lot to do in this pair, as we are still pretty much in the middle, although we are starting to fall, but pretty much in the middle overall of that consolidation. The British pound had a pretty strong session during the day, but you can see that the 1.72 level has still held as resistance. So having said that, it's really not broken out yet, but it certainly shows that it wants to. British pound could be a buy on dips, and most certainly a close above 1.72 for the daily candle would be very intriguing. Looking at the US dollar, Canadian dollar, you can see that we did rise again during the session on Tuesday, heading towards the 108 level, which was the bottom of consolidation previously, from about 109.5, maybe 110 to 108. I believe we are going to challenge that area, and whether or not we can break out will be probably determined during the session, as there is a interest rate decision, and more importantly perhaps a statement that comes out of the Bank of Canada that might make the market perhaps think about shorting the Canadian dollar. With those horrible jobs numbers, a softening oil market, and quite frankly, a lot of concern about global economy still, we could see a strengthening of this pair. It should be noted that this is a longer term uptrend line that goes all the way back to the bottom, so the fact that we have bounced here is in fact something to be paid attention to. And lastly, looking at the S&P 500, you can see that we tried to fall. We found support again near the 1965-ish area, turned back around, formed something along the lines of a hammer. But really at this point in time, I believe that this market is starting to look less and less like one that's trying to trend and just one that's trying to build up enough momentum to finally break out above 2,000. It may take a minute, but once we do, it should be more of a buy and hold situation. I'm still buying on dips going forward in the futures contracts.